Alright guys, so this video is going to be focusing on the patterns of the stocks that we try to find. So basically, stocks have three major types of patterns. So one is uptrending stocks, which means it's going up. The other one is downtrending stock, obviously. It just means that it's going downwards. And the third kind is like a parallel channel, which is, basically having support and resistance bounding the movement of the stock. So we'll talk a little bit more about it later. So right now, just have a look at this stock right now here. If you can see my mouse moving, so it doesn't matter what stock it is. We just want to have a look and have a general idea of the stocks. So um, we generally, if you're looking, like a mid to long term trade, we try to find the stocks through, 180 days and 4 hours chart. So in this chart, you can see that the stock is actually moving, continuously upwards, and this shows a very good uptrending pattern. You can ignore like the top line and the bottom line that is just basically indicated by myself. But then simply looking at like this line that I'm showing you right now, this is a very good uptrending line. So this is what we would like to find to trade. So what we try to do is to avoid trading downtrending stocks, because even if we can get in a very good point with a very good entry, we don't actually, we can't actually avoid um, getting a loss if it actually goes back down and make a lower low, because downward trading stocks are always making lower lows. So we can't actually avoid that, and so we'll be in a very risky position, especially when we can't actually predict the exit point real well, especially when we're just beginners, or when we're not comfortable with trading. All right, so yeah, this is a really good example of uptrending stock, and this is what we want to find. It's something that it's continuously moving upwards. So let's have a look at another one. So the other one will be Nike. So just having a look at the recent patterns. Oh, okay, this is pretty good. So if you have a look at this, this is what I call a parallel channel, where this line is drawn by myself, of course, and also this line as well. So these two forms the resistance and the support. If you already know that, that's good. If you haven't, don't worry, we will talk about it later. So basically what happens is that the stocks go up and down, and they are moving within the channels, within the top and the bottom point, and they tend to not go over this line. You can see that even if it goes over slightly, it comes back down and then pushes to the bottom line, and it goes back up again. This is a really good parallel channel. So obviously, if you can see this, it means that it's kind of easier to be predicted, which is beneficial to us, because like if we can predict and get in a point like the bottom point, then when the stock just goes upwards and reaches the highest point, then we will have a very good profit. This is why we try to find parallel channels to trade. And obviously, if we are trying to find upward trading stocks, like when it's looking like this, it's really good, because even if we get in at a very high point, like a very high entry like here, um, even if the stock just goes downwards like this, it will eventually get up again and go make a higher high. A higher high means that a new high point that is higher than the previous high point, and so that's why we're gonna be easier to make a profit. So for beginners, try to find upward trending stocks, and over time also try to find parallel channels, but always avoid trading downward trending channels, because even if like professionals, they try to avoid that because the risk is too big. If you can actually find stocks with with uptrends and parallel channels, why do you have to trade something that risky, right? After all, it's your own money. So you know always gonna have opportunity to find something better. Okay, yeah. So let's see if we can actually find another example, or just to have a look and have a practice. So oh, good. So you can see this UNG, ticker symbol UNG. So you can see that the stock is actually coming downwards with a very strong downward pattern. So let's say if you actually you got in a very good point. Let's say here, right? So the trend goes up. You're very happy about that because like you're making profit. Then when you're here, you don't actually know that you have to leave. So then you just hang in there, but then it suddenly just drops downwards like that, and makes a lower low, and then you're in a 2% loss for that day, and now you're sad. This is the reason why we try not to trade downward stocks. So later on, I will also talk about like the confirmation reversal to tell you like how a stock can actually go from a downward trading pattern to a parallel trading pattern or to an upward trading pattern, and that will actually allows you to prevent getting in at a very wrong point in a downtrend, and can actually make some good profit after the stocks have dropped quite a little bit. Yep. And so after watching this video, I would definitely recommend you to go find stocks and just identify whether the stock is currently recently um, showing an uptrend or a downtrend or a parallel channel in the 180 days and 4-hour graph. This will definitely help you have a better analysis, um, and it will be beneficial in long term. So what I usually do is to just to try to analyze a few stocks before the market opens. And yeah, it's the best way to practice because you're doing it every day and you consolidate your knowledge and you know more about it every single day. Yep. So I guess this is what I want to talk about in this video.